Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 8th day of July, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just want to have access to the chat box. We also stream live each day on our YouTube channel, which is very easy to remember. You already know youtube.com. Just to add a /CFRN, youtube.com/CFRN, and there it is. Not only do we stream live, but we archive each and every daily show on our YouTube channel. Currently, over 1,700 daily live broadcasts archived there for your viewing and educational pleasure. So with that, we'll open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace in our lives. God, we pray that you would help us find fulfillment in your presence. Help us to live in such a way that our actions serve as a reflection of your own grace and your own mercy. Teach us, God, to seek first your kingdom and to live a life that brings glory to you. In Jesus' name we pray. Amen.
Amen.
Amen. Well, happy Thursday, guys. Let me give you the numbers here from around the world. These are the cash markets, or the indices as they're called. Starting in the U.S., the Dow down 215 points. NASDAQ down 120. S&P 500 down 33. The Russell 2000 down 11. No true movers or shakers in that bunch. And the commodity basket, crude oil up 45 cents, trading 72.65 last. Gold down $5.20, trading 17.9690 last. Silver down 13 cents, trading 25.99 last. In the Asian markets at the close, Nikkei down 248 points. Shanghai down 28. The Hang Seng onto your hat. The Hang Seng down 807 points. That's almost 3%. That's definitely a mover and a shaker. And in the European markets at the close, FTSE down 120 points. That's over 1.5%. The DAX down 272 points. That's over 1.5%. And the CAC down 130. That's just over 2%. So we've got a red day in Asia, we've got a red day in the UK, and it's a big red Radio Thursday here in the US of A. So with that, we'll go to Michael, get a recap of what happened this morning in the live training room. After that, I'll be back. We'll go over the logic alerts, the concierge trade alerts. Today's Thursday, Dr. Tom Day, but he's under the weather, so he probably won't join us today. So Michael, I can see your charts. It's all yours.
Okay. All right, here we go. Here we go. Good afternoon, everyone. Today is Thursday, the 8th day of July, 2021. Now, if you have not taken a free trial with us and you want to, then go to the homepage here at cfrn.net. Right here on the homepage, scroll down to where it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge, so we can tailor one-on-one training just for you, and we really do that training. So you really just got to tell us that. We'll schedule the meeting with you. Hit the send button, and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, we don't know that you took the free trial, so you got to make sure you click on that link, all right? All right, now the spreadsheet. I'll get back to the spreadsheet here. Now you see, everything is working right today. I was having difficulties with it yesterday. That was because my mouse was messed up. I went back to a wired mouse, so it's not messed up anymore. All right, so if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of July, 2021, as I just said. Today we made 72 ticks in crude, it lost 14 ticks in gold, and we're plus 35 on the ES. Put us at $1,017.50 on the morning session. Today it took 3 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 32 trades this morning. See, this volatility we've been having just now, lately this week, has been great. And look at these days, these totals right here. They're just awesome. Anyway, on the month now, why does it say we're 5 days in? Are we really 5 days in? Yeah, 1, 2, 3, 4, 5. Okay, on the month now, we're at $4,372 a contract. That's over 5 days, averaging $874 per contract per 2-hour trading day. On the year now, we've got our goal for the day on 128 out of 129 days. And that puts us at $85,262 a contract. That's over 129 trading days, averaging $660 per contract per 2-hour trading day. Okay. All right, let's get into what happened now. I'm going to start out, well, it doesn't really matter what I start out with. We got a lot of trades on everything. So I guess I'll start out with gold because that's where I really got whooped today. Gold really had my ticket today. All right, you see all those stop outs in gold. Now, when it first opened up here, I missed this short trade right here, which would have been great to have. Then I missed this one, both of which would have been nice profitable trades and really high probability. See how the MA1 never even wavered on the pullbacks right here? Those would have been great trades to get into if I would have gotten into them. However, I didn't. I missed this one. This happened just as fast as these, and it just totally went in the wrong direction. And so then gold was just whipping around in here, and I tried to jump on it again over here, and it stopped me out. So that was, I had what at this point? No trades. Then my first trade was a stop out, so it was -8. Then it slammed all the way down here without giving the trade set up. Gave one right here really quick. I missed it, pulled back. I tried to get in on it again on the next move down. Now the cycle was going up a little bit steep here. Stopped me out. So 2 stop outs in a row, -16 at that point. Now I stay away from it for a little bit because it's getting, it was chopping around in here, but it was moving kind of fast, chopping around. Gave a bounce off the BBC here that I didn't take because we didn't have a trend. Looks like it was establishing a trend. Came right back down. I didn't take this because I wasn't sure it was establishing a trend here. I wanted to see something else. So I didn't take that. Then it proved to me that I was right in not taking that. It came all the way back down here. And then I was looking for it to get back down to this level. Pulled up, gave me a short trade right now. Now this wasn't the prettiest short because the cycle was starting to move up. The MA1 was already all the way up there. And the trade probably, it was right on the trend line. So I ended up with a break even on that. Then it slammed all the way down here without giving us a trade setup. Then I stopped out again right here. So now I think I'm -24 on crude. I'm not crude, I'm -24 on gold. Then I stop out again right here. I'm thinking it's going to get out of all this chop. You know, it looks like it was moving up right here to get out of it. Nope. Stop me out there. Stop me out there. Now over here, I'm minus 32 on gold. I don't remember being minus 32 on gold in 5 trades ever. And then I had a little trade here, but I wasn't taking it. Then it looks like it was going to turn around and continue down right here. After it failed right here at the tops, over here, there was obviously some selling pressure. It looked like it was going to turn around and move down. So I shorted right there, and I got 1 tick. So at this point, I'm at minus 31. Okay. Then I tried again right here, break even. I didn't take any profit on this. I took a break even. Tried it again right here. I didn't take any profit right here. Ended up with a break even. Then it did all of this without giving me a trade setup. Okay, this huge move down right here, no trade setup. The slingshot wasn't set up for it. Then it chopped around and chopped around, and then toward the end of the session, right here, there was one more long trade. I got in this one right here, and I picked up 15 ticks on that trade. That put me at a respectable minus 16. Then I grabbed 2 more right at the very end right here. Put me at minus 14. Since then, it has given 1 trade setup right here, right here. Okay, so gold was tricky today. It was hard. The ES, let's jump over here to the ES. Now the ES made a big move during a break. But we'll go back to the beginning here on the ES. The ES had some nice moves, and they were really good, measured kind of moves. All right, so our very first trade on the ES was right in here. We ended up with a break even on it. We're looking for it to get up to here. It did, then it pulled back, but the slingshot at that point was all messed up. You couldn't take advantage of it anymore. Dropped down into this weekly trading zone. Then I gave another trade right here. On this one, we picked up 2 ticks. Then we had a break even right here. And it gave a long trade right in here that I missed, went right up into the zone. Chopped around a little bit in here, right up above the zone. The slingshot wasn't letting us take anything. Over here was a long trade that I didn't get into. Then it got really choppy again and stayed that way. And then it started to break away from the zone here, and I was looking for it to get down to this level. I was looking for it to get down to that level way over here. I put in these 2 levels here. I said it's going to get to one of those. And it got down to this one. But right here, I ended up with a break even. Then on this trade right here, I picked up 14 ticks. Yeah, 14 ticks to put us at plus 16. Then the next one, I picked up 8 ticks to put us at plus 24. Then 7 ticks to put us at plus 31. Then it made this huge run up here without giving us a single trade setup. Okay. Then it was taken off out of the inside of the zone right here. This was a question that Janice had asked me why I didn't take this trade. And I said, because the bar itself was inside the zone. I didn't want to take that. That was the 3rd one of those that happened today. There was one there, there was one here, and there was one earlier. So you can see that one would have worked out if I had taken it. That one would have worked out if I had taken it. And the other one that I didn't take would have worked out too. All right, so then I started drawing these lines in here. I said it was either going to go up to here. This was the pullback number, and this was the target number. Sadly, it hit both of those, but didn't really give us a trade setup. There was one right here that would have been a break even had I taken it. Then we got over here toward the end. I took plus 4 on that to put me at plus 35 and a break even there. And I thought that was toward the end, but I guess it wasn't. I took another break even right there. See, the slingshot's all messed up in here. That's why I wasn't doing anything. There was a long trade right there. And that was actually during the session. I didn't see it. Had to break this dynamic resistance in here. Then once it did, it was going right up into the zone. So I guess it was a momentum trade right here if you wanted to take it. Give a lot of chop through here, and yeah, didn't have anything else. That was it. So the ES was pretty active today. We ended up with plus 35 ticks on it. We didn't miss too much on the ES. Okay, we didn't miss too much on crude either. I think I stopped out my last 2 trades on crude. Yeah, I did. After just killing it for the morning session, I stopped out on my last 2 trades. All right, so this was my first trade on crude right here. I picked up 10 ticks. Okay, and I guess that's where I got the goal for the day. So the goal was really at 120. We were really at 120 when I got the goal, not at 100. Actually, 25, because I had 2 ticks on the ES. I think. I'm not going to change it. We'll just go with that. I might have had a couple of break-even trades before I got those 2 ticks on the ES, and that would have meant this was the one. I think that's the actual case. Anyway, we picked up 10 ticks on that one. And then the next one, it looks like on this one, picked up 10 ticks on the first one, then 19 ticks on the second one to put us at plus 29. I missed that trade right there. Then the one after that, we picked up 13 ticks to put us at plus 42. Then 12 ticks to put us at plus 54. And I wasn't missing anything in here. The slingshot, it was resetting at this point. And I went from 54 up to 60, so we had 4 ticks there. No, 6 ticks there to 60. And then 6 ticks there to 66. And then, what did we get there? 7 ticks to 73. Oh, sorry, 9 ticks to 70. No. 66. Yeah, 7 ticks to 73. And something in here got a little mixed up because we went from 73 to 78. So there was a 5-tick trade somewhere. And then we went from 78 to 88, which is probably this right here, was a 10-tick trade. We missed a trade there. We had a break-even trade there. We missed a trade there. Then right over here, from 88. Okay, there's a couple of trades that I didn't take into account here. This one and this one. I thought I took them all into account. Let me see. Let's go back and check this out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Nope. There are 2 trades that I didn't take into account. And it looks like they were right in here. Okay, because over here we had gotten up to 78 and then a 10-tick win, which I believe was right here to get us to 88. And then we had this trade and this trade that I didn't take into account, which I think would have gotten me to 100 ticks, over 100 ticks probably, it looks like. That's what I was trying to get to on crude. And then I stopped out. And so what I have written down is I went from 88 down to 80. I missed a trade there. And here I went from 80 down to 72. And then we get into the break. And during the break, there was a long trade. Oh, here. I wouldn't have done that. Those were it right there. 2 trades during the break. So crude was really active, and it was really working well today as far as reading the DOM and having it go to where I wanted it to go and was expecting it to go. You know, when I was in trades, like down to there and down to there and up to there and all that stuff. Yeah, so that's what we ended up doing on the morning session. Okay, let me bring this back up. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of July, 2021. We're plus 72 ticks on crude, minus 14 ticks on gold, plus 35 ticks on the ES. Put us at $1,017 on the morning session. Today, it took 3 minutes and 2 trades to get to the goal for the day. At that point, $100 a contract, and we took a total of 32 trades. So on the month now, we're at $4,372. That's over 5 trading days, averaging $874 per contract per 2-hour trading day. On the year now, we've gotten our goal on 128 out of 129 days, and that puts us at $85,262. That's over 129 trading days, averaging $660 per contract per 2-hour trading day. Okay. Now, if you've not taken a free trial with us and you want to, then go to the homepage here at cfrn.net. Right here it says free 5-day trial, no credit card required. Click on that. It'll bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and we'll send you a confirmation link. Okay, you must click on that confirmation link. If you don't click that confirmation link, we don't know that you took the free trial, so you gotta make sure you click on that. Okay? Okay. That's it, guys. With that, we can pass it back out to fabulous Phoenix, Arizona. It's Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I'm ready. Recap of the recap.
Today, it took 3 minutes and 2 trades to get to $100 per contract.
Good job.
Thank you.
Guys, a number of months ago here on this very radio program, when it was announced that some folks working for the government were going to come door to door and ask if you had been vaccinated, and then they were going to give you proper, information to where you could go and, in fact, get your vaccination. And they said in that press release that if their records don't reflect after a few weeks that you've actually followed through and gotten the vaccination, that they'll come back and remind you again and possibly bring medical personnel with them to offer you the vaccine in the comfort of your own home. Well, I said on this show, about the third time that they show up at your house, it's no longer going to be a request, it's going to be a mandate. Now, I saw a post that Valerie put up this morning in Telegram about New Zealand, and I don't know who the gentleman was that was speaking in that video. Michael, you might know who it was. I don't know if you looked at it or not.
I don't know. I'd have to look at it.
It's in the Breeze channel, I think. But
Okay.
the fellow in New Zealand, he appeared to be some kind of government official, but I could be wrong. He said that their campaign in New Zealand is that everyone will be able to get a vaccination who wants one for free by the end of the year. And that beginning next year, anyone who has not been vaccinated, they will go out and they will hunt them down. I think the term they used was find them. But the core of the message was, if you live in New Zealand, you must take the vaccination. Well, that's New Zealand. Well, I happened across an article on military.com, and this article says the Pentagon is considering making COVID-19 vaccinations for troops mandatory once the FDA fully approves the shots. Now, that sentence alone, I won't read the whole article, but the Pentagon is considering making the vaccinations for troops mandatory once it's actually approved by the FDA to be safe to put in a human body. That kind of seems a little.
Yeah. Why is anybody rushing out to get this thing?
A little bit odd that we're being encouraged to put things in our body that the FDA has not even yet approved.
Yeah, but normally they're suing companies for putting stuff out that they haven't approved.
Exactly. So that's a problem. And while I was on the military.com website, I actually stumbled across this article, which was published just 2 days ago. The United States left Afghanistan's Bagram airfield after nearly 20 years by shutting off the electricity and slipping away in the middle of the night without notifying the base's new Afghan commander, who discovered the Americans' departure more than 2 hours after they left. Afghanistan's army showed off the sprawling air base Monday, providing a rare first glimpse of what had been the epicenter of America's war to unseat the Taliban and hunt down the Al-Qaeda perpetrators of 9/11 attacks on America. 20 years this base has been there. The U.S. announced Friday it had completely vacated its biggest airfield in the country in advance of a final withdrawal the Pentagon says will be completed by the end of August. According to the new base commander, General Kohestani, we heard some rumor that the Americans had left Bagram. And finally, by 7 o'clock in the morning, we understood that it was confirmed that they had left in the middle of the night. U.S. military spokesperson did not address the specific complaints of many Afghan soldiers who inherited the abandoned airfield, instead referring to a statement made last week. The statement said the handover of the many bases had been in the process soon after President Joe Biden's mid-April announcement that America was withdrawing the last of its forces. Now, before the Afghan army could take control of the airfield, which is about an hour's drive from Kabul, it was invaded by a small army of looters who ransacked barrack after barrack and rummaged through the giant storage tents before being evicted, according to Afghan military officials. One of the soldiers said, "At first we thought maybe they were Taliban." He said the U.S. called from the Kabul airport and said, "We're at the airport and we're leaving." Now, Kohestani insisted the Afghan National Security and Defense Force could hold on to the heavily fortified base despite a string of Taliban wins on the battlefield. The airfield, they abandoned this airfield, which had a prison on the base with about 5,000 prisoners. They just walked away and left 5,000 people locked in their cells. Taliban's latest surge comes as the last U.S. and NATO forces pull out of the country. As of last week, most NATO soldiers had already quietly left. The last U.S. soldiers are likely to remain until an agreement to protect the Kabul International Airport, which is expected to be done shortly. Now, just to give you an idea what a big thing this is, on Monday they displayed the massive facility, which is the size of a small city, that had been exclusively used by the U.S. and NATO. The sheer size is extraordinary, with roadways weaving through barracks and hangar-like buildings. There are 2 runways and over 100 parking spots for fighter jets, known as revetments, because of the blast walls that protect each aircraft. One of the 2 runways is 12,000 feet. There's a passenger lounge, a 50-bed hospital. The new base commander, the Afghani commander, said the U.S. left behind 3.5 million items, all itemized by the departing U.S. military. They include tens of thousands of bottles of water, energy drinks, and MREs, military ready-made meals. When you say 3.5 million items, it's every item, like every phone, every doorknob, every window. The big ticket items left behind include thousands of civilian vehicles, and many of them they did not bother to leave the keys, and hundreds of armored vehicles. Kohestani said the U.S. also left behind small weapons and the ammunition for them, but the departing troops did take the heavy weapons with them. Ammunition for weapons not being left behind for the Afghan military was blown up before they left. Afghan soldiers who wandered Monday through the base that had once held as many as 100,000 U.S. troops. A lot of you listening to this broadcast live in a city that doesn't have a population of 100,000. The little town I grew up in Georgia had a population of about 8,000 back then, and now today, many years later, it's still about 100. This was a city unto itself.
And how condensed is it too? I mean, you know how it is on the base.
Yeah.
You squeeze in 100 because you're over there in the Middle East. It's not like having a base in like where I was in Idaho, for instance. For a period. That base was 10 miles away from the town. The town was all full of base people. But
right.
Yeah,
you had the military.
Everybody's on base.
You had the military and you had the townies. Right.
Out in the Middle East, though, everything's on base. You don't have, it's not the same type of atmosphere.
Yeah, exactly. One of the Afghan soldiers said, in one night, America lost all the goodwill of 20 years by leaving the way they did, in the middle of the night, without telling the Afghan soldiers who were outside patrolling the area. Within 20 minutes of the U.S.'s silent departure on Friday, the electricity was shut down and the base was plunged into darkness. The sudden darkness was like a giant signal to the looters. They entered from the north, smashing through the first barrier, ransacking buildings, loading anything that was not nailed down into trucks. On Monday, 3 days after the U.S. departure, Afghan soldiers were still collecting piles of garbage that included empty water bottles, cans, and empty energy drinks left behind by the looters. Well, looters got to have their energy. Koastani, the new commander, meanwhile, said that the nearly 20 years of U.S. and NATO involvement in Afghanistan was appreciated, and leaving in this manner, it's just mind-blowing. I mean, if you just think of all the people who had a loved one who served during that 20-year period and maybe was stationed at that base and possibly lost life or limb during this 20-year period. All of a sudden, in the middle of the night, we just leave and turn out the lights. And all of that stuff, that was, of course, paid for with, U.S. taxpayer dollars, just kind of left behind. I mean, if you're going to leave them these vehicles, why not leave the keys? I mean, it's just a nonsensical thing. So on a global scale, there's weird stuff happening, and at your home, I believe, and I may be wrong, but I think the day's coming, and I've written about this a little bit on the Telegram discussion group. The day's coming where they will come to your house and they will insist that you take this vaccination. Already many hospitals, universities, and other military getting on board are insisting that if you want your job or if you want to go to school, I don't know what the travel restrictions are right now, but you have to show proof of the vaccination. And so I foresee the day when, as it is written in Revelations, that no man may buy or sell, but that he has the mark. Okay? Now, is this the mark of the beast as it was written? I don't know. I don't know. But the fact that we're being forced to do something, I mean, this whole country was founded on, life, liberty, pursuit of happiness. That doesn't sound like liberty to me. Now, if we were talking, I'm sorry, go ahead.
In a lot of cases, it's not even life. These things are making people, they're killing people.
Yeah.
They're not necessarily preventing anything, and they're definitely, causing illnesses and death.
And if you got it, for all the people who got the COVID, less than 0.5% died from it. It's not like we had this out of control thing that was, just killing everybody in its path as it spread around the world. A lot of people got very, very sick.
How many people actually died from taking the shot?
I mean,
it's much higher than that. I can't wait
to see those number comparisons.
I was reading something the other day, and there was a graph. I was going to make a screenshot of it. It was a graph, and it's much higher than the number of people. The percentage-wise is much higher than the people that got it and died. The fatality rate of getting it compared to the fatality rate of taking the shot. So a huge difference.
The cure is worse than the problem. Mm-hmm. In essence.
Yeah. The VA's been after me. They called me today. They've been emailing me stuff and sending me letters in the mail. I think today's day 14, and they're going to send me another one.
I got a couple of text messages, and then they stopped. So I don't know. And they were just kind of generic. Have you got your shot yet? If you haven't, you can go to this place. I don't know where their database came from. My phone carrier is AT&T. Maybe they just access the AT&T database. I don't know. But everyone listening to this broadcast, I guess you have to make a decision where you're going to ultimately stand on this thing. I mean,
well, there's a whole bunch of other things that are happening. Like, some private schools, private colleges are making it mandatory.
Right.
And there's one here, Lenore Ryan University here. Now, Macy goes to University Christian High School, which is a private high school, but the kids at that school take classes at the university. So they take university level classes. Now, Lenore Ryan is making it mandatory, and they're going to make the UC kids that are taking classes over at LR, they were talking about making it mandatory for them, and they sent the thing out to all the parents. Between us and our neighbors, us and the next house down and the next house down, there's 1, 2, 3, 4 kids that go to University Christian that take classes at LR. And there's 1, 2, 3, 4 alums from LR. And none of them want their kids to take that shot. And fortunately, University Christian said that, with all the feedback that they got, that they weren't going to make it mandatory for the kids to take it. I don't know if LR is going to...
Go ahead. No, go ahead.
I was going to say, I don't know if LR is going to make them not be able to take the classes there, make them take remote classes, but I don't know. I don't know how that's all going to pan out, but I know that they made the decision not to force the kids to do that, but LR is forcing their kids to do it. So...
no matter which side of the political spectrum you're on, the left, the right, somewhere in the middle, forget all that. Why are the powers that be so hell-bent on getting this substance, this thing, whatever it is, because we don't know, because the FDA hasn't even approved it yet, why are the powers that be so hell-bent on getting this into the body of every person on planet Earth for something that, had a very, very low mortality rate? I mean,
yes,
they still sell cigarettes, but they know cigarettes kill people. I mean, that's just one example. Go ahead, Val.
99.97% survival rate.
That's if you get it.
But that's if you get it, yeah.
If you get it. I mean, I'm guessing most people didn't get it. I don't know what that percentage is. Val, do you know who the guy was talking in that video that you posted from New Zealand?
I don't. I thought he was a correspondent.
Okay. So he wasn't actually a government official.
It looks like he was in a government
It did. Yeah.
press conference kind of setup.
Yeah. So, in a very nice way, he said, we're going to give everybody an opportunity to willingly get the vaccination. He goes, but there's going to be some that don't want, and we'll have to come and find you. That's maybe this is why Elon wants to go to Mars. I don't know.
Yeah, I know.
He can make the rules there.
I mean, this is all. To me, I find this more troubling than COVID-19 itself.
Yes, it's being used as a springboard for some of these dreams that the political elite and the globalists have had, in my opinion, for 100 years. They've been working toward this. And I think they're just drunk with power and how easily our health was used as a reason to mask up and to take these measures, and people followed through.
And there are so many different avenues you can go down. Conspiracy theories with this. I mean, it happened right before the election. Perfect timing for everybody to be, sick and for unemployment to be crazy and for everything to just go wrong. And now suddenly, we're half a year into it, and the economy is in the gutter, and now everybody's, nobody's wearing masks anymore. It's suddenly, it's sort of getting back to normal.
There's one quote that Garrett always quotes from. I don't think it was Aldous Huxley. Maybe it was.
I think it's Ayn Rand, if it's the one I'm thinking about.
Well, I don't think it was Anne, but it talked about how in the future the government will be able to control the people. The people will willingly do whatever the government tells them to do because of pharmacological reasons. So You know, this is not trying to start a new conspiracy theory, but just thought that maybe there's something in this thing that suddenly makes people very, you know, compliant with whatever the government wants them to do. I mean, if you take away the guns, first we got out of the schools, now there's bills in Congress to take away your guns, and then they force you to take this vaccination. And so pretty soon everyone is, you know, dependent upon the government for day-to-day survival. I mean, this is the thing that kind of thing that revolution throughout history. This is the kind of thing that revolutions were born out of. People saying enough's enough. So
yeah. We have one of our partners in Chicago, Robert. He sends me things all the time because he is totally into all the conspiracy theories, and I mean not only the theories, but he's into all the stuff that's factual.
Mm-hmm.
And
Thank you. Yes.
And so he sends me stuff all the time. I don't know if does he send it to support? Do you get that too, Val?
I don't.
Okay, well, he sends it directly to me too. Well, directly to me then. But yeah, there's some crazy things going on out there, and there are vaccinations that are way better than the one that they're forcing you to take from Pfizer, that have a much better success rate, and they don't have all the side effects. And you know, the things from Pfizer, particularly the one from Pfizer, has got so many things in it that, you know, they're causing what is it?
Well, there's an enlarged heart thing with like teenagers or something, some kind of heart issue.
Yeah, and that was a big thing that came out with all the kids, is they were going to try and force the kids to take it, and
that have 100% survival rate.
Mm-hmm. Yeah.
So I mean, if
the question begs why?
If you've been vaccinated, then why should you care whether or not I've been vaccinated?
Right.
I mean,
Or if you've had COVID, why should you be forced to take a vaccine?
Yeah, they say that right there, because you already have the antibodies present, that zapping you with that, whatever it is, could in fact be very dangerous in and of itself. So.
Yeah. Well, I know. Jake got the vaccines because he was flying, so he got it.
Okay, so the airlines do require now?
Not domestic flights, but he got it anyway.
Okay.
Because he was going to go on the plane. But domestic flights, they don't require it. As a matter of fact, I was pretty adamant once he got up there about him just getting the negative check before he came back down, before he got on the plane. But turns out it was, you know, he couldn't manage it on that end. But you know, he got a negative test before he left, and that was all good. And they said, you know, you don't even need the negative test now. But I just wanted to make sure that if he got it, we knew where, and you know, we had a pretty good idea of where anyway.
Right.
But no, the security at the airport was lax.
And I mean, and yet, how many tens of thousands of people will pour over the southern border today who've neither been tested or vaccinated, nor do they exist on our census rolls or anything else.
And they'll be carrying everything in here, you know, because all those numbers are just total opposite of the spectrum. In, you know, I don't want to say Mexico's a third world country, but you know, countries that are.
I think developing nation might be.
Yeah. Yeah, I don't know. It's a mess, and it's going to be, and it's going to be used for political purposes.
Well, it already is.
From now on, it's going to change things.
And our current administration, you know, again, whichever side of the political aisle you stand on, you've just got to look at what's happened in the last, you know, 100 and however many days it's been since the new administration took over. Our president sternly told Russia, hey, stop hacking our companies. Well, that hasn't stopped. China has said they're getting ready to reunify with Taiwan, and that in no uncertain terms, they said if America gets in the way, they will take military action. I mean, anyway, okay, I guess we better move on with the show. Looks like somebody put something in the chat box. I'm not sure what it is. I'll take
Yeah, it was just a quick message by Michael.
Okay.
That it's all about control, and it is.
Yeah.
They're taking it away from us.
Yeah.
Well, one last thought. When we look at Michael, you hit on the economics. When you look at the devastation that happened to small and medium-sized businesses and the wealth that was accrued by the big tech guys, this vaccine is the same kind of thing for the pharmaceutical guys. Now, how many billionaires have been made in the pharmaceutical business now? So, people will say conspiracy, but the reality is fact is fact.
It's always about the money and power. That's why they hung Jesus on the cross.
Yes, it goes way back.
Yeah.
Way back.
Back into time.
Uh-huh.
Okay, well, there you go, guys. That's our thoughts on the world. Feel free to share yours in the chat box. Wayne says that one conspiracy theory is that there are nanobots in the vaccine, which can be controlled. I have to say, Wayne, I don't doubt that that's possible.
I've heard there's stuff in there that they can track you.
That's the Moderna. I'm plugged in through some friends into a naturopathic community, and there are many cases of their projection is that we're going to find that this next generation of young ladies are going to, the high percentage of them are going to end up being sterile.
Yeah, that's what Jada is off about.
We've got, and just look at the number of women who were pregnant and lost their babies. Things like this. Disconnect the dots. I mean, if everybody would be open-minded enough.
Been real big on the depopulation thing.
Yes, and look what his interest is in Moderna, in Pfizer, and well, heck, Wuhan, for that matter. So connect the dots. I mean, if everybody just does their own homework, you don't have to.
He owns more farmland than anyone on planet Earth.
And that's
why does a computer geek? He grew up in a very privileged family. There were several computers in his house. As a child growing up, long before most of us probably still hadn't got our first game console. I never had one, but I mean, if you control a person's money and their food supply, you can make them do just about anything, because people will do just about anything to protect their family and to provide for their family. So and so much of the stuff that these guys are involved in, I mean, it's not going to happen overnight. It's going to take a little time, but none of these guys, Fauci or Gates or they're not spring chickens. Maybe they have another however many years left on planet Earth, 10, 20, I don't know. Only God knows that. But their motivation. Bill Gates, obviously, he's not doing it. We say it's always about the money, but with a guy like Gates, it has to be about more than the money, because he's already got. If he went on a mad spending spree every day for the rest of his life, however long that is, he could not spend, all the money he has. I guess if he wanted to be really crazy, he could. And I know that he and his wife give away a lot of money, or I guess ex-wife. Yeah, they just got divorced.
Yeah.
Caesar added in that he has control of the organic seeds. That's true. Yeah. And he's behind in Monsanto, the GMO seeds. Lots of African farmers have lost their land because someone with adjacent land planted the GMO seeds, which are patented, and the wind blew some of the seeds onto the other farmer's land. And you guys can Google this. I know this really sounds like it's made up, but they go in and then confiscate the poor farmer's land because he has, in essence, stolen the patented seed from the farm next door. And China, for a number of years, has just been buying up land in Africa like crazy. I don't know what percentage.
And in Italy. In Italy.
In Italy, too?
Yes. Yes.
Okay. All right, guys. Well, I enjoyed chatting with you guys. We'll move on to...
Yeah. Say some prayers.
Yeah.
Keep the prayers going.
Yeah. God, we pray for our nation right now, our country, the world. Lord, I assume you know what's going on because we don't. But for those of us that believe you are the God of the universe, the creator of the heavens, that we exist because of you, give us wisdom, God. Give us courage. Give us the strength to persevere and help us to make wise decisions, and help us just to face, whatever tomorrow brings, because we trust you. We know we can't trust our government. We can't trust the tech titans in Silicon Valley, but we trust you, and so our life is in your hands. In Jesus' name, amen.
Amen.
Okay, guys, we're in week 153 of Logic 247. That's our around-the-clock, 24/7 Emini alert service, which also covers gold and silver and crude and sometimes a few other markets. These alerts are based on current price action. Now, when I say current price action, that doesn't mean you have to be sitting at your desk to place the trade the second the alert comes out. I try to build in at least 20 minutes minimum from the time an alert goes out before it actually triggers. Because the purpose of the alerts is not just for you to trade those and earn a living, but the purpose of the alerts is so that you learn how to find opportunity in the market yourself. The alert comes out, you go to your charts, you look at the alert, you look at the charts, and by repeating this and then trading it in sim until you qualify to go live, you learn through that process to spot the opportunity yourself. Price moves from support to resistance, back to support, back to resistance, over and over again and again. Never-ending cycle. Price flows on a 1-minute chart just like it does on a monthly chart, and everything in between. Support to resistance and back again. That sounds awfully simplified, but that simple explanation or simple understanding of how markets work, it took a lot of years and time and energy and money to arrive at that very simple conclusion. That's how price flows. And so our indicators, they help you find dynamic support and resistance. Our weekly trading zones and our CTAs help you find fixed support and resistance. Because if what I said is true, and it is, that price flows from support to resistance back to support, having some tools that help you better understand the price action that's unfolding on the screen in front of you, it's a process. When you become a passport holder, you've got 2 hours of live instruction every day, Monday through Friday. It's interactive. In other words, it's a live market. Michael's putting on, taking off trades. In his absence, Valerie's there putting on, taking off trades. You're following along, learning the methodology, learning the strategy, asking questions, and getting answers. No matter what you're trying to learn how to do, whether it's become an auto mechanic, an airline pilot, or a brain surgeon, learning brain surgery or air conditioning repair simply by watching videos is kind of difficult. So that's why all of the major professions that you might consider going into you just instinctively know that, you've got to go to school or become an apprentice. You have to have someone actually teach you, and you need to be able to ask that teacher questions. Imagine going to a school where there was a teacher standing up there teaching all day long, but you were never allowed to ask any questions. Or you could email in a question and you might get an answer back, a day later, or a week later. That would not be a very effective way of learning how to do anything. And so that's especially true of trading. Our methodology and strategy is really quite simple. Everything under the hood is the same and fluid across all markets and time frames. From a 1-minute gold chart to a monthly S&P chart. The underlying principles, everything under the hood, it's the same. And I know that when people look at Michael's charts, and they look at my charts, and they look at Michael's charts and my charts, you go, oh, well, that's different. Well, what's different is the time frame. What's different is how we assign risk. In the live training room, which is rules-based, okay, there's a rule for everything. The rule is that we risk 8 ticks on every market, on every trade. The only difference with the alerts in regards to risk is that we use the actual structure of the market to assign the amount of risk and to determine what our trade to target is. But the underlying principle is the same. Okay, 34 total alerts issued since Sunday night at 6 p.m. Eastern. That's when the Globex markets open. They stay open until Friday afternoon at 5 p.m. Eastern. There is a 1-hour break each day, Monday through Thursday, from 5 p.m. to 6 p.m. So right now, this is the Thursday session. That will end today at 5 p.m. Eastern. Tonight at 6 p.m. Eastern, the Friday session will begin. And then the week ends tomorrow afternoon at 5 p.m. Eastern. So 11 of the 34 never triggered. We're all caught up, not waiting on anything. 23, we had a Monday holiday, of course. 23 actionable alerts, of which 17% would have been stopped out based on not risking more than $300 per contract per trade, less when possible. Now, doesn't mean we always risk $300 on every alert. We query the chart with a 3-step process. If step 1 if market structure requires more than $300 of risk, we go to step 2. If that requires more than $300 of risk, we go to step 3. And if that requires more than $300 of risk, then we pass on that trigger. We wait for that alert to trigger again, because once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Also, on the 2nd, 3rd, 4th, 5th, 6th, even sometimes 7th trigger, you'll find that there's less risk required based on market structure and actually increased profit potential. Now again, the logic alerts are based on current price action. Our original alert service, the concierge trade alerts, those are based on historic price action. And those are not delivered around the clock as opportunity presents. They're delivered as a static report shortly after the Globex open every evening. Globex opens at 6 p.m. Eastern. Last night they were published at 6:15. Best way to handle it, go put a line, and use the S&P as an example. Go put a line on the chart at 43.55. Put a line on the chart at 43.36. If price starts, once this is published, if price starts trending up towards 43.55, that's bullish. We'll look for opportunities to buy the market. If price starts trending down to 43.36, that's bearish. We'll start looking for opportunities to sell the market. Once price has crossed 43.55, then we're only looking for long opportunities. Once price drops below 43.36 in this example, then we're only looking for opportunities to sell the market. Very simple, okay? Now, here's a 30-minute chart. There's a 30-minute chart. Okay. So, yesterday on the show, I drew in this window of opportunity. For those of you that were tuned in, you saw it. If you weren't tuned in, you can always go back and watch it because we archive each and every daily show. And here, let me just I think it's already refreshed. Okay. So, yesterday during the broadcast, we were building a green candle. We had a bearish engulfing candle back on this day. Okay. The high was higher than the previous 2 days high, and the low was lower than the previous 2 days low. This little doji in the middle, that was holiday, so that kind of, it counts because it happened. But so we had a bearish engulfing, but what was once a big red candle all the way down, before the session closed at 5 p.m. Eastern, buyers came in and drove price back up. So that doesn't change the fact that it's a bearish engulfing candle, but it sort of took a little something out of it. So here we come yesterday, where we put in a new all-time historic intraday and closing high. Markets opened last night, right up here, and we dropped. We said on the way down, we've got to trade, there's potential support at blue and climbing, potential support at the step line, potential support at the previous day's low, potential support at the Tuesday low. I said if price can trade below the low of Tuesday, then we have this window of opportunity down to the daily BBC and the 24% fib retracement of the last leg up and the 62% Fibonacci price extension. So we had 3 good reasons for the market to find support where it found support. Again, the daily BBC. Now when price makes it to the daily BBC, we expect a big reaction on the daily chart. Now this is true on all time frames and all markets, not just the S&P. When price drops to the BBC on any time frame, any market, we expect that to be good support until proven otherwise. Now, did we touch the BBC to the tick? We did not. Did buyers come in a little early? They did. But the numbers that I gave you yesterday, which I think was roughly 4,300, down to 4,275 or so. 4,300, 4,275. It's a 25-point move. Price did it. Buyers came in, drove it up. Fibs are an area. Indicators are an area. Weekly trading zones are an area. Now we get accustomed to seeing it touch and turn on a dime so many times, we often can forget that it's an area. Don't forget that. It's important, okay? Because if you were waiting for price to physically touch the daily BBC, you got left behind, okay? And if you did, that's okay. Don't cry over missed trades, because there will always be another trade that comes along. So price came down, buyers came in, off we went. So now what? Well, we didn't put in a new high. Yesterday's high stands, so the new all-time historic intraday high is 43.53 and a quarter based on the September contract. The new all-time historic closing high is 43.51.75. Now, this high, 52 and a quarter, today's high. See, the previous high was 53 and a quarter. So this was almost a bearish engulfing candle, but not quite. It still carries a lot of weight. We dropped from 43.52 to 42.79. Okay, so from 43.50 to 42.80, and what's that, about 70 points? Got about a 70-point drop total. The window of opportunity itself is what you see on the screen. So now, what happens from here? Well, we've already taken out that swing low, but I would still keep my eye on it. 43.05 and a quarter. Okay. Now, important prices, important areas are almost always tested. So, is there an incredibly high probability that price will come back down to test this area? Extremely. That doesn't mean it's going to happen. It just means that this is a business based on probabilities, and there's a very high probability the price will come back to test this area. Now, on the second trip, if we trade and close below the BBC, then we start looking at these numbers. That's the 24% fib retracement of the last leg up. Over here, this is the 24% fib retracement of the entire move, which began November 2nd of last year. And so the 24, we came very close. If we come back down and get below the daily BBC, here's the 38% fib retracement. Here's the 50% fib retracement. Here's the 62% fib retracement. It's also right here, you'll notice there's a bullish cross on the chart. Anytime you have a bullish cross that leads to an extended move across all markets and time frames, when price revisits that area, at least the first time down, whether it's a bullish cross or a bearish cross, if it leads to an extended move, which it did here, when price returns to the area where the bullish cross took place, that's almost always good support. And as you can see, that good support took us, the bullish cross happened at a price of roughly 41.46, and it took us up basically 200 points in the S&P, which is equivalent to 2,000 Dow points. There's a 10-to-1 ratio between the S&P and the Dow on any given day, although we've seen some division of late, which historically that's not the case. Historically, the four major indices are on the same side of the street most days: S&P, Dow, Russell, NQ. Today we see that all four are in the red. We've had weeks and weeks here of two of the major indices being one color and two being another. And I've always said that when you have all four on the same side of the street, all four red or all four green, that's when you have your best trading opportunities, you have more follow-through, etc. On any given day, if the S&P at the end of the day is up 10 points, then the Dow will be up roughly 100 points. If the Dow is down 200 points, then the S&P will be somewhere down around 20 points. That's just a relationship that's existed forever, I guess. It was certainly there in 2005 when I started trading futures. Except here of late, we've had very unusual market activity where we might see the S&P, close the day in the red substantially, and the Dow in the green, or vice versa. Okay, just bringing that to your attention. Now, why am I even talking about a daily chart? We don't use a daily chart in the live training room. The alerts are not based off a daily chart. The daily chart, its purpose is to give you that high altitude look at the markets. It enables you to see things that you can't see on the smaller time frame. It helps you identify where major support and major resistance are, because price really does flow from support to resistance and back again. So coming down, I would watch the low of this candle as potential support. 43.05. It's an area. We've got a weekly zone at 43.17, and then the one below that's at 42.93. So 42.93. So we spiked that weekly trading zone at 42.93. We only have one zone below that this week, and that's at 42.33. Which is just above that 38% fib. Now, once you've identified, now we've got a red candle. We hit an important area on the chart, the daily chart. We caught a bounce. What's the next high probability move from here? Well, this candle looks an awful lot like this candle, except on this one we don't have a wick on top, and the red body at this point is much larger. But on this day, when we were talking about it on the show here, we had a red candle. There was a red candle on this day all the way down to where the wick is. But before the session closed, buyers drove it up to close here. So it became less bearish. Okay. So where we close today is very important. If we close on the low of the session, that sets us up for quite a bounce. Now, we've already had a bounce. We didn't quite touch the area, but that's okay. It's an area. So as price comes back into this area, if that's how the market works itself out, you should still be prepared for a bounce. What we'll be interested in is first a close below the BBC, and then a candle that opens and closes below the BBC. Price always reverts to the mean. In our case, the mean is green. Price always reverts to the mean. And the pullback holds more often than it doesn't. Even when it spikes it like this, it's still held. And after this test of the BBC, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive days of green candles. I think there's 11. Then we had this one little red candle in the mix. That in and of itself is unusual. And we've been walking sideways for 4 days. 5, 2, 3, 4, 5. Our step line, which at the beginning of this move, okay, after this test of the BBC, our step line's on the left side of blue and climbing. That's very bullish. But as a move starts to run out of steam, whether you're on the daily or the 30-minute, once price starts to walk sideways, and often before, as the momentum wanes, what will happen is the step line will go from the left side to the right side. And that's exactly what we've seen happen. Now on a 30-minute chart, when the step line crosses to the right side, a close below the step line is a sign to exit, because price is trying to get back to the BBC. Now that's something, it's called the exit signal, that we use on the 30-minute chart. This situation here, let's face it, anything can happen. We don't have any news events that I'm aware of this afternoon, so there's no economic report factors involved that will drive the market up. This bounce, I think, a self-fulfilling prophecy. Okay, institutions and deep pocket traders watch daily and weekly and monthly charts the way you and I watch hourly charts and 30-minute charts and range charts. So when price pulls back to the BBC on our 4-tick range chart, there's a very small select group of individuals that are even aware of that dynamic taking place. But everybody knows that price came very close to the 24% fib retracement of the last leg up. And so the question becomes, well, are fibs even real? Well, yeah, they are real. They exist in our DNA, and flowers, in a pretty woman's face, symmetrical balance, all of that. You don't need to spend 20 grand on expensive fib software because most trading platforms have free fib tools. You just got to do it yourself. Okay, so I guess it's up to you to determine, is it worth the expenditure to have the machine draw it for you when you can just draw it yourself. So, did the market have this incredible bounce from, I don't know, 42.80 so far? It's 43.16. We've got a weekly zone right here. We're sitting on a weekly zone, 43.17/18. Okay, that's what prices did. We'll see it more clearly when we go to the 30-minute chart. So did this happen because fibs are a real thing? Or is it a self-fulfilling prophecy? And what I mean by that, because all of these large institutions and deep pocket traders, the ones that can trade in the size that actually can move the market, did they come in because they anticipated a bounce, which in and of itself created the bounce? Well, science says it's a real thing. But I also know that a large part of this is that self-fulfilling prophecy. If enough people believe that as price approaches the 24% fib, there's going to be a bounce, nobody wants to miss a big move, so what do? They buy their ticket early. Now, so you can believe whichever it is that you want to believe. Just be aware. Now, you don't see me drawing a lot of fibs on the smaller time frames. Not that they aren't relevant there, they are. But I use them to demonstrate and to help you understand why we had this huge bounce from this area. Because lots of deep pockets expected a bounce. So if you're expecting a bounce, whether you're a 1 contract trader or a 100 contract trader, are you going to sell the market? No, you're going to buy the market. And so when enough people buy the market, this happens. Now, why didn't we go higher? The high today was 52.25. Why not 52.5? Because no trader, great or small, who was actively engaged in the business of trading at that moment in time, nobody hit the offer at 52.5. In the DOM, there were contracts for sale at 52.5. But no one elected. And so when buyers stop buying, and I don't mean they pack up and go home, I just mean they stop hitting the offer. When buyers stop hitting the offer, price stops climbing. In this case, you might say, well, everybody that wanted to be long was long from yesterday. We closed just a tad off the high of the day. The high was 53.25. The close was 51.75. Okay. And so the market, when we opened last night, with no visible wick, the market didn't even attempt to go any higher. When sellers, and there are hedge funds and institutions that specialize in shorting the market, that's their thing, it's what they do. When they recognize that buyers have stopped hitting the offer, well, they start opening new positions on the short side. And when that happens, anybody that from this day was holding overnight understands that dynamic is in play. If they didn't take profit during yesterday's day session, then when the markets reopened last night at 6 p.m. Eastern, they had an opportunity to then take profit. And so when someone who thinks the market's going to the moon, right, but they know there'll be pullbacks along the way, if they choose to take profit here, that puts selling pressure on the market. So you've got two dynamics. You've got profit taking, which creates selling pressure, and you've got short-minded traders who prefer to be on the short side of a market when the opportunity presents itself. So you've got new positions being opened and old long positions being closed out. And I know I've said it a lot, I'll say it again. The market drops faster than it rises. Call it financial gravity. But from this low right here, it took 1, 2, 3, 4, 5, 6, 7 sessions to go from what we saw happen in one session to the downside. It took 7 sessions to get us up to that price, because it takes financial commitment for price to rise. It does not take financial commitment for prices to drop. If it were simply profit taking, if it were simply buyers stopped buying and no sellers even came, no new short positions were opened, price will still deteriorate. Because if you're long, the further it drops, you've either your stop loss gets hit, or you reach that pain point, and everybody has a different pain point, where you're so far underwater you just can't bear to look at the screen anymore, so you just hit sell market, get a little slippage, but you're free. You're not trapped in that trade. Now, there are trapped traders here. Are there, there's still somebody out there hanging on to that position, believing that it will turn around. Okay. The high was 53 1/4. The close again was 51.75. And so that little wick right there, there were traders going long. Okay. There were traders that went long, and when the market closed, they were underwater. So when Thursday session opened last night, they had to decide what to do. Some of them probably bought more, right? But not enough to compensate for all of the profit taking and the new short positions being opened. So here's the S&P. Concierge trade alerts. I don't know if you grabbed a screenshot. If you want one, you can. 5, 4, 3, 2, 1. See the lines in the sand? 43.55. 43.36. You can think of a CTA like a WTZ. The weekly trading zones, once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. The CTA, or daily trading zone, it's carved in stone for the entire day. Okay? And price flows from support to resistance and back again. The indicators show you dynamic support and resistance, while the WTZ and the CTA shows you fixed support and resistance. So we opened here. First candle coming out of the gate. Oh, this is the window of opportunity that I drew in yesterday during the show. 47 to 49. And then I did say, and then if it trades through 49, then of course on up to the weekly zone at 52.53. So we made the trip once, and then we made the trip twice, and then we made the trip 3 times. So that window of opportunity that I gave you on the show yesterday, from 47 to 49 to ultimately the zone 52, because every long trade, the final trade to target is the zone above. Every short trade, every short alert, the final trade to target is the zone below. So we hit the zone, we hit the zone, we hit the zone, and each time we got rejected. Only 3 things happen at a weekly zone. The most likely is this, consolidation. Second most likely is this, rejection. The third and least likely is called the slice. That happens about 5-10% of the time. That's this. Typically what happens when we have a slice, price will retrace back to the zone that it sliced through and then continue in the direction of the slice. That did not happen. Well, I mean, ultimately we're going to come back to this zone, but usually price will run out of steam before it gets to the next zone. It will retrace back to the zone it sliced through and then just continue in the direction of the slice. So the trigger last night on the short side for the S&P was 43.36. The initial trade 2, or the trade 2 target, would be the zone below, which is 31.32. So that's a 4-point trade. But we did slice through the zone, so there were alerts in the channel to take advantage of this. You could have stayed with the CTA if you so chose, or you could have just grabbed your couple points, and went home. Now, 42.93, we've only got one more zone below that. That's down at 42.33/34. So we had a bearish cross, price pulled away, price pulled back, didn't physically touch the BBC in this case. However, you can see what happened. Price got back on the south side of red and falling. On a short trade, you always want to have red and falling to complement what you're doing. And price traded through this zone at 17.18. And then we hit this zone, 42.93/94, where we consolidated 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 30-minute candles, so 5.5 hours. You see how on this short move, this extended move down, the step line's on the left side of red and falling. As long as that dynamic is in place, there's no real reason to get out of the trade if you're trading for more than 2 points. If your goal every day is just to get your 2 points and continue to build and add to the number of contracts, somebody made a comment that they can't see the screen. I assume you guys see the screen. All right. Anyway, so price comes down to the zone at 43.17/18, and it bounced to 43.23. So we expect the zone to be support until proven otherwise. This next candle proved otherwise. Took us down to the zone at 93.94. The step line, as you can see, it goes from the left side to the right side. Once that step line crosses from the left side to the right side, the exit signal on a short trade is the first green candle that closes above the step line after it crosses over. So that would be 42.92 1/4. So from 43.36 to 42.92, that's 36 and 8. So it's a 44-point move from the entry to the exit signal. Entry, exit signal. And if you held out, this would be the next exit signal. It's a green candle closing above the step line. Okay, so price walks sideways until it runs into red and falling, which has now become blue and climbing. That represents potential support. So up we go. We hit the zone at 43.17/18. Swing high was 22.75. And so we're just consolidating at the zone. I used to always use 2 lines. I've gone to the 1-line format. I just want to remind you that the zone is, I did it up here, 31.32. Here it is at 17.18. Okay? So when price drops to a zone, we expect it to be support. Just like it was support here. I mean, it gave us a nice bounce from 43.18 up to 43.23, 5 points. Then we took it out, and this isn't really a slice. It's because of what happened on the previous candle, but you can see the dynamic. This was a big red candle all the way down, and then it reversed and ran back up to the zone it sliced through, and then continued in the direction of the slice. That's typically what happens with the slice. So here's the market making up its mind at a weekly zone. It will do one of two things from here. It'll attempt to go to the zone overhead or the zone below. Price is always trying to get to a weekly zone. If we're above the BBC, it's trying to get to the zone overhead. If it's below the BBC, it's trying to get to the zone below. We expect, this is the most typical thing you'll see at a zone, consolidation, just like we saw here. This was rejection, okay, but ultimately we traded through it. So as this thing consolidates and makes up its mind what it's going to do, there are no obstacles in our path to get back to this zone. If the market attempts to go lower, it's got to overcome some obstacles. Because we're above the zone, of course, it's got to get below the zone. We just had a bullish cross here, so it's got to get below blue and climbing. That's potential support. The BBC, that's definitely potentially good support. So we could have a market that drops to this area, and then bounces us back up to this zone, where we would be confronted with the same dynamic all over again. Important prices, important areas, almost always tested. If price can trade below this area and get down into this area, okay, and we have a window of opportunity here, and then down to the zone. So roughly 43.05 down to 4,300. If we take out that low, this could all become one trade, not two separate trades. And 42.98 down to 42.94. The zone's 93.94. So we got a 5-point window, a 4-point window. And again, if it's a strong momentum move, then it's possible that all becomes just one move. Now, the beginning of this move, we'll call it here at this zone, 52.53. Now, with fibs, you typically draw from the low to the high, but this is reverse fibs, because we're looking for the fibs in the other direction. So instead of drawing from the low to the high, I just drew from the high to the low. And so the 50% Fibonacci retracement lines up with this weekly trading zone at 17/18. If price continues higher, there's the 62% fib retracement, and then the zone, and then that takes us back to the CTA short that gave us this move. So that's from the high to the low, reverse fibs. Okay, so from a fib standpoint, as I said, we have no obvious, if price chooses to go higher, once we take out this swing high, we have no real obstacles in our path, but we do if you embrace that 62% fib at 43.24. So you might say, I'll take 43.26 to 31. That's a 5-point window of opportunity. Something kind of like that. In the meantime, you just have to be patient and let the market show its hand, prove to you what it's really trying to do. And then whatever the market's doing, that's what we want to do. Whether we agree, disagree, if the market's going higher and our indicators say we should be selling, then we're going to just do nothing. Market's always right. Let's go to the Dow. Okay. The Dow and the S&P look an awful lot alike. They usually do. When we have normal market conditions. And this is starting to look, and I hope I don't jinx it, but this is starting to look and feel like old times almost. Not quite there yet. We'll have to see what the coming days bring. We drew in this window of opportunity yesterday and this one. Okay. I don't remember what the number was, but it looks like we might have, hit it or made a tick over it. I think we were trying to squeeze 20 points out of there. So I think it was 95 at 34,615. Okay. We knew we had to overcome this resistance. So close but no cigar. All right, the CTA last night was 34,450, and we triggered that at 2 a.m. Eastern, 1 hour ahead of the London Open. We got almost to it here. There's our bearish cross. We got a leg, got a retracement. Support held at the weekly trading zone, 34,100. Now, wherever you're at in your trading, I hope you understand the importance of knowing that on this move down, the potential for good support was at 34,100/105. We've published the zones since December 14th of 2009. They've served us incredibly well, and they've behaved exactly the same for the decade plus. So we got a bullish cross. Price now pulling back to the BBC. We expect it to be good support. It's proven otherwise. If it does turn out to be good support, and we got a window of opportunity on the upside. 34,335 up to 65. Potential 30-point window of opportunity there. Want to see price get above that high? Be in, be out before we get to the high of that candle. Very simple. If price pulls back to the BBC here and fails to hold, I'd prefer to see that because, as I said, the markets drop faster than they rise. So BBC, you see this pullback held, sent us to blue and climbing, support. From support to resistance, back to support, back to resistance. Now the market's looking for support. It should either find it here at the BBC. If it doesn't find it there, it should find it again at this zone. I mean, we spent a lot of hours here consolidating at the zone. So the window of opportunity on the downside is roughly 34,200 down to the zone. But to be conservative, maybe 34,120 from 200 to 120. That's an 80-point opportunity. At $5 a point, $400 per contract traded. By the time you and I talk tomorrow, the market will have either filled this window or attempted to, or it will have filled this window or attempted to. Let's say the market attempts to fill this window but doesn't quite make it all the way. That's okay. From 325 up to, I think we said 25 to 55. That's 30 points. Well, if it only goes half the distance, that's still 15 points. And this one down here, 80 points. If it fails to get all the way to the zone, if it gets halfway, that's still 40 points at $5 a point. It's $200 per contract traded. Zone, the zone, the zone, the zone. Here's the rustler, man in the street. Okay, so the vertical line separates the Wednesday session from the Thursday session. We opened below the BBC, so immediately we're anticipating lower prices, but we've got blue and climbing below us, so we know we need to get below blue and climbing. That's an obstacle support. And then we make it down to the CTA trigger at 2243, where we consolidate, just like we do at weekly trading zones. We consolidate it for a number of hours, and then the drop came, and it took us from the trigger at 43 down to the zone, which is 2210/11. So that's, a little over 30 points at $50 a point. It's $1,500 per contract traded. Market found support at the zone. Buyers rallied us back up to get above the trigger. Once triggered, an alert is more likely to trigger again than to not trigger again. And that little wick sticking up there, okay, that makes this a very attractive opportunity for shorting. Unfortunately, we're above the BBC. Our strategy: sells below the BBC, buys above the BBC. So we're in retracement mode. Now, counter trend trades, it's not something we teach. It's not part of the alerts. All of the alerts, 7,000 plus in the alert channel, those are all trend trades as defined by a 30-minute chart in the BBC and price. But we do know that the next high probability move is if price can get below support at blue and climbing, then from there, it's a high probability that we will drop to the BBC. $22.33 down to $22.29. 4 points, $50 a point. $200 per contract traded. And then if the support holds, then there'll be a trend trade opportunity back up. If support fails to hold, that opens a window of opportunity down here. Oh, from say 22.19 down to 22.14. It's 5 points, $50 a point, $250 per contract traded. Now there's 13 minutes left in the life of this candle. What I'd like to see is a new candle print, but you got to work with whatever the market gives you. I'm not encouraging you to take a counter trend trade. Again, my personal experience has shown me that a trend trade has a higher probability of doing the next obvious thing than a counter trend. Okay? Because price doesn't always pull all the way back to the BBC. That's why in the training room you'll see Michael do momentum trades, because the momentum was strong enough that price couldn't make the complete pullback. If you choose to trade this counter trend move, 22.33 down to 22.29, that's 4 points, $50 a point, $200 per contract traded. But again, you gotta expect this to be good support. Although, we've got a big red down day on the daily chart on the S&P, which creates some downward pressure for the other markets. That doesn't change the fact that we could find support here and bounce. So we'll come back and look at this before we wrap up. We need to get through these. NQ triggered the CTA 766 at 2:30 a.m. Eastern, just before the Globex, or before the London Open, and that took us down through 1, 2, 3 zones, and the zone held as good support, 14,570/71. We spiked it, but it held. In fact, we went from zone down to the zone, up to the zone, down to the zone, up to the zone, down to the zone, and then back up to the zone, through the BBC. See, this first move up, the BBC was good resistance. This candle opened here, it was green, touched the BBC, and the bottom fell out, but found support at blue and climbing, right on cue. The next candle reached down, touched the zone, and then buyers have been real busy driving us back up. Now we've got a zone here at 727/728. We've closed above it and opened above it. So the high probability move is to get back above the trigger, and this area right here, 14,794, that may be potential resistance. That's if the buyers keep buying. Always remember, for this thing, if you get long here, once you place your order, it's out of your hands. Whether or not you have a profitable trade is dependent on other traders continuing to buy. Obviously, you're getting in right here because you believe price can go higher. But you also need all the other traders in the world to believe that from here price can continue to go higher, and from here price can continue to go higher, and from here price can continue to go higher. Okay, what you believed here, whether you end up with a profitable or unprofitable trade, is not in your hands. It's in the hands of other traders, and whether or not they believe higher prices are possible. Now, I know that that's a bit of a brain twister when you think about it. Okay? In order for this to happen, there had to be traders at all different levels who, if they entered the market long, they didn't enter long because they thought it was going lower. They got long because they thought there was the potential for it to go even higher, even higher, even higher. At what point do the bulk of traders out there no longer believe that it can go higher? When you reach that point, it starts to look a little bit like this. Now, at some point, if it looks like we may go to a red candle, okay, but we actually sliced through the zone 727/28, the high is 42, so we sliced through the zone, and on a slice, what typically happens is price will retrace to the zone as sliced through, and then continue in the direction of the slice. So if you're long right now, the only way your trade is going to be profitable is if other traders around the world, great and small, believe the market can go higher, because they have to keep buying. There has to be new money coming into the market to make this thing go up. Your profit or loss is in the hands of other traders. You have no control over it. The only thing you can control is where you enter and how much risk you're willing to expose yourself to to find out if the market, to find out if enough traders agree with you. Okay, now they agreed with you here and here, but some traders stop believing here because there's no new money coming in. As we drop to the zone, we know we expect that to be good support until proven otherwise. If price trades through the zone, then we expect this to be good support. And if we trade below the BBC, then we have a window of opportunity to be short on the downside. The CTA, let's see, the window of opportunity I drew here yesterday from 766 to 756, that did get filled. Okay, so let's get this thing wrapped up. So we had a nice move from 756 down to 570. So let's see, 550 to 750 would be 200 points. It's not quite 200 points. That's over $3,000 per contract traded if you entered here and got out here. Okay, if you entered here and just got out at the zone below, that's the trade to target. If you entered here and just got your goal for the day, congratulations, that bill's for you. Alright, crude oil. CTA on the short side was 71.39. Here's where we opened. Swing low, 70.76. So we'll call it 70.80. That's about a $600 per contract move. 71.39. Call it 71.40 for the sake of simple math. To 70.80. That's 60 ticks at $10 a tick. $600 per contract traded, and it did it in about 30 minutes. This one here dropped from 71.39 down to 71.22. 17 points. $170 per contract traded. And then the long CTA is here. Should buyers push us up through that trigger, this bearish cross here is potentially good resistance. So once the CTA triggered on the long side, if it does, you only got one obstacle really in your way to the zone, and that's right here. So you might make a note of that. Potential resistance at 73.60. And of course that's an area. On gold, triggered on the short side. Okay, there's the vertical line. Here's the first trigger. Trigger was 1800 and we went down to 96.3. So $370 per contract traded. And we did all this. Came back down, triggered again. This time we made it to the target, which is the weekly zone below, 95/96. So $400 per contract traded. Two $400 per contract opportunities. And last silver traded on the short side, or triggered on the short side once. This one is different from this one. This one you've got red and falling. That supports a short trade. Over here, you're above the BBC, and so you don't want to sell into what is obviously potential support, and it was. When price pulls back to the BBC, we expect it to be good support, and it was. Then it pulled back again, and it was again. We finally got through it, okay? And then once we took out these lows, that opened the window of opportunity down to the zone below. So getting short here Market structure supported that. The indicators support that. But not here, not here, and not here. On this, you gotta wait for price to take out these lows. Then you can consider going short. Down to the trade to target, which was the weekly zone at 25.90/91. And I think every one of the markets bounced off the weekly zone at the low. Silver hit the lowest weekly zone. Gold hit a zone, it's not the lowest. Crude did not. We're already below. That is the lowest weekly zone right there, 72.10/11. So we've already traded below the lowest weekly zone on crude. On the NQ, that's not the lowest zone. There's still two more below, but the zone was support after the big move down. Same thing on the Russell. Same thing on the Dow. Same thing on the S&P. Windows above, windows below. Here we talked about price pulling back to the BBC on the Dow. Okay, so far we have good support. If this candle that's currently working, in fact we just got a brand new candle, if it closes below the BBC, then that opens this window of opportunity. On the Russell, remember I said price doesn't always pull all the way back to the BBC. Well, it still may. We traded down to, what was the low of that candle? 2230.7. And it looks like the BBC's at 2227. So we simply ran out of time on this candle. Every 30 minutes you're going to get a new candle. Doesn't matter what price does. Unlike the range chart, which we use in the live training room, that has absolutely nothing to do with time and has everything to do with price. So from here, a high probability move looks to be to the BBC. Again, that would be a counter trend trade. The question, of course, is what happens when we get there? Do we find support? If so, then we have an opportunity long. If support fails to hold, we have an opportunity to be short. Price is currently, what, 2232. And the BBC is down at 2228. So there's about 4 points of opportunity between where we are now, the BBC, but a reminder that's a counter trend trade. Nothing wrong with trading counter trend as long as you understand that you are trading against the prevailing trend on the 30-minute chart. All right, good word for the day. Yesterday we started talking about answering the big questions. We'll continue. Romans 2:4. Can't you see that his kindness is intended to turn you from your sin? Isn't the church full of hypocrites? Yeah, so's the Moose Lodge and Walmart and the Parent Teachers Association. The world is full. We always hear that the church is full of hypocrites. The world is full of hypocrites. But I digress. The word hypocrite comes from the Greek word for actor. Hypocrisy is the practice of professing beliefs, feelings, or virtues that one does not hold. In other words, you say one thing and do something else. The true Church of Jesus Christ is made up of true believers. Hypocrites are pretenders who sit among God's people. Jesus even had one among his 12 disciples, Judas. Let's be honest. People have left the church because of hypocrisy. There are more actors in the church than in Hollywood. Hypocrisy runs rampant in the modern church. But be careful if you judge it. There's an old bumper sticker. Christians are not perfect, just forgiven. But before you take it upon yourself to pass judgment upon people who make mistakes and struggle with weaknesses, it might serve you to read Romans 2:1. You may think you can condemn such people, but you're just as bad, and you have no excuse. When you say they are wicked and should be punished, you are condemning yourself. For you who judge others do these very same things. And we know that God, in His justice, will punish anyone who does such things. Since you judge others for doing these things, why do you think you can avoid God's judgment when you do the same thing? Don't you see how wonderfully kind, tolerant, and patient God is with you? Does this mean nothing to you? Can't you see that His kindness is intended to turn you from your sin? Now, those aren't my words. That's Romans chapter 2, verses 1 through 4. Don't worry about the hypocrites in the church. God will sort them out. That's it. He sits on the judgment seat, not you and I. He'll sort it all out. You don't ever have to lose one wink of sleep. Now, the church world today is very much different than the back in the day church. Most of us growing up heard one preacher preach. It depends on, I guess, some denominations rotate in a new pastor every couple of years, but an awful lot of churches in the Deep South, there's one pastor, and that's it. You go to that church every Sunday, and your experience with God is vicariously lived through that man. I was going to say, or woman, but back then there weren't a lot of lady preachers. Although the first people to share the good news was two women who went to the tomb and it was empty. So, myself, I watch Steve Furtick, Pastor Steve Furtick, every Sunday morning, Elevation Church. He's in North Carolina. They have, I forget how many locations around the world. They have a huge online community. The worship, if you listen to contemporary Christian music on the radio, if you listen to K-Love or Air One or any of the, out of the top 10 songs, and they have pretty tight rotation, at any given time, probably half of those songs were written and performed by the Elevation worship team, or Elevation in conjunction with Maverick City. But anyway, here's my point. We grew up listening to one man's interpretation of the Bible most of our life. If you're in a small town like I was, you had a Baptist church, you had a Methodist church, you might have had a Presbyterian church. We had this one little Catholic church way on the outskirts of town. I remember driving by there. My grandmother or grandfather would go, I wonder what those people do up in there, which I thought was kind of an odd thing to say. But in my grandparents' house, there were no books. They weren't educated people. My grandmother she made it through the 2nd grade before they called her out to the fields to pick cotton. True story. Support the family. So there weren't books in my grandparents' house, either one, on my mother's side or my father's side. If you were going to the bathroom and needed something to read, it was probably going to be the Sears Roebuck catalog. Or we had a weekly newspaper, the McDuffie Progress. So It's a different time, a different world. You can go on the internet now, or just whip out your iPhone or whatever phone you use. You can find somebody out there preaching a gospel that coincides with whatever you believe. Think about that. It's like some kind of a spiritual buffet. You can peruse, you can listen over here, listen over there. Now, I have 3 or 4 that I really enjoy, that I listen to on I watch the Elevation live worship experience every Sunday morning in the comfort of my living room, in my lazy boy chair on the big screen TV. And it's probably some of the most enjoyable church of my life. I mean, do I miss, shaking hands and talking and stuff? Yeah, to a degree. I don't miss the gossip. I don't miss the backbiting. I don't miss the hypocrisy. Now, I'm not saying that there's none of that going on in Elevation Church. I'm sure there is. But we aren't exposed to that part of it. So don't watch them and think they're all perfect and that you're somehow imperfect or your church is imperfect, because that stuff exists everywhere. And much of the scripture warns us about it. Don't get involved in it. Don't be a gossip. But back when I was a kid, I mean, of course, there was no Twitter. There was no Facebook. There was no place to publicly display your hate speech except at church. Hushed tones in the bathroom. Did you hear what Sister so-and-so did? Yeah. Well, I heard Brother so-and-so came home drunk the other night. He did? I grew up in a dry county. Some of you don't know what that is. The county I grew up in, McDuffie County, where my grandfather was the sheriff, the sale of alcoholic beverages was not legal. It's like my little county never left the days of Prohibition. Now, you could drive a few miles across the county line to the Happy Hollow. And you could sit at the bar and drink. You could get beer to go. I don't think it was illegal to possess alcohol in McDuffie County. But you couldn't get a license to sell it. So, anyway, times have really changed, and I reflect on that a lot because my grandmother was one of the most deeply religious and spiritual people that I know, and one of the wisest. Okay? Now, she wouldn't pass a math test or a biology test or a history test. There's a difference between book smarts and wisdom, and she had more wisdom, I think, than anyone I ever knew. And because there were no books and no magazines in her house, where did that wisdom come from? It came out of that big Bible that laid there on the coffee table, or the small one that she carried with her, or the 2 or 3 preachers that she had over the course of her life. Now, once a year, we'd have an out-of-town evangelist come through that was recommended by the home office in Cleveland, Tennessee. Our church was the Church of God. There's 2 different Church of Gods, but I remember we used to get a magazine. We did get one magazine. It was called, I forget what it was called, but it came once a month. It was published by the Church of God out of Cleveland, Tennessee. And it would, keep you current the way there's a number of current, like charisma. That was the charisma of back then. So anyway, I said all that to say this. We're talking about the big questions in life, answering the big questions. Today's gossip, hypocrisy. Well, actually, the topic was hypocrisy. So, don't let that label or that keep you out of church. Oh, they're just a bunch of hypocrites. And there's hypocrites everywhere. Like I said at the beginning. You'll find them in church, you'll find them at work, you'll find them at school. And what's a hypocrite? A hypocrite is simply somebody who says one thing and does something else. So it's not even a religious thing, it's just part of the human condition. And we all know that we should just stay away. My grandmother summed it up so well in her wise ways. If you don't have something good to say, just keep your mouth shut. Period. She didn't have to add anything to that. There was no but or anything else. Just, if you don't have something good to say, just don't say anything. We could all do well. Our media could do so well. Our governments, the whole world could function better if everybody lived by that. So, we're in this world, but we're not of this world. So let's behave the way Jesus would approve of. And that's our good word for the day. Kenneth said, a hypocrite is one who hides behind a mask. Yeah, no, I agree, Kenneth. You're right. Say one thing, do something else. Pretend to be a certain kind of person when in actuality you're a very different kind of person. And no one knows, integrity is what you do when no one else is looking, But there's one person that's always looking, always watching. You can't dig a tunnel deep enough or a fortress stout enough to keep out God's eyes. He not only knows what you're doing, what you're thinking, knows the condition of your heart, right? We can hide from people, but we cannot hide from God. We can't run far enough or fast enough. All we can do is do our best to follow what Granny Reeves said. If you don't have something good to say, shut up. That's how she said it sometimes. All right, guys, thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.